You're watching Notepad with me, Ibrahim Sani. About a few weeks ago, I discussed a little bit more about earned wage access with my guest, and the responses from all of you is that you want to learn a little bit more about earned wage access or EWA. So in the studio, joining us today is the Payday CEO and Paywatch, Paywatch CEO and co-founder Richard Kim. Richard, thanks for taking the time to speak with us. I want to learn more about earned wage access, but before that, maybe you can talk to us about your background so that people can actually appreciate the kind of ideas that you're going to bring about, not just about EWA, but Paywatch itself.
Yes, so my name is Richard Kim. I'm from Korea. Worked in consumer finance all my life. Started in Citibank, managing credit card product and marketing, and then last job was MasterCard before I started Paywatch. But before Citibank, was a marketer in FMCG, companies like Coca-Cola and Unilever.
So the retail business has always been part and parcel of what you do, I suppose.
Right.
And then how did you end up in Malaysia, I suppose?
So we launched a Paywatch platform in Korea in 2020, and about the same time, we were invited to enter a fintech contest for APEC 2020 as a representative for Korea. So there were hundreds of fintech companies entered this contest. Basically, it was to find a solution to help out the gig workers and B40 segment workers in particular.
Okay, it's an interesting journey on how life takes a turn, right?
Right.
And that's how you, I guess, broaden your wings over to Malaysia. But at the same time, it's also quite interesting about what Paywatch does, including that of earned wage access. So perhaps you can take the time to walk with us in terms of understanding what EWA is all about.
So EWA, it stands for earned wage access. It's basically a lot of people live paycheck to paycheck, and sometimes this monthly pay is, there are a lot of necessity emergencies which can come about in between. And so the concept is basically if you work one day, you should be paid that day, right? And so it was a concept not only popular in Asia, but actually also in US and UK. Because I guess US and UK used to be paid a lot on a weekly basis, and which has moved to more bi-weekly and monthly. And people are not used to being paid so seldomly. And so CW came about to basically to solve the problem. And there were a lot of payday lenders beforehand, which were charging much higher interest. So EWA concept is to try to come up with a more affordable way of giving pay based on your salary, right?
Yeah, so payday loans, I think the market or the folks out there knows it's astronomical interest rates.
Right.
And even if it isn't that astronomical, it's still very high compared to what banks are offering. But EWA also charges some form of fee.
Yes.
It's still there in terms of...
Yes, and
in terms of interest.
Actually, most EWA players out there also taking on a loan from like venture capitals, and so obviously they have to charge a high interest on top of it because there's a cost of fund, and you are lending that money to the consumers.
So Paywatch has LPs, I suppose, and VCs?
Actually, Paywatch, we work differently.
Okay, so tell us about how you guys work differently.
So right from the start, what we're trying to do is we're trying to give access of first-tier banks to B40 workers rather than us being the lender. So if I take a step back, when I joined, let's say, City Cars for the first time, being an FMCG marketer, I couldn't understand why we were charging 20-25% APR for credit card revolving.
Yeah.
So I went to the CEO.
It's 18% here.
Yes, as the CFO, and asked, why are we charging so much when we are actually targeting a relatively affluent
Yeah.
skilled middle class
Yeah.
workers. And he explained to me, well, even as a bank, there's a cost of fund involved, which
Yes.
is about 4%.
Yes.
And then there's a credit risk. Even
Yes.
though this is a good segment, we have
It's
to
an
take
unsecured
into
loan.
It's still unsecured loans. So you have to take into about 5 to 6%.
Yeah.
So that comes to 10, and then there's an operation cost, and then plus marketing.
Yes.
And obviously you have to earn some profit for the shareholders.
Yes.
So that's why
It's 18%, 25%,
18,
and so on.
25%. So, and yet once you start getting into starting to pay 20, 25% interest, it's very difficult. It becomes a never-ending story.
Yes.
That was my experience, and I always had an itch. How do we go about solving this problem?
Okay.
Right? And so I said, if we, first of all, as a platform, we won't be able to be funded at a low interest like the banks. So I think it's best that we let the banks give this cash flow access directly to the consumers. So, and then the banks, why they cannot serve this B40 segment? It's because it's an unsecured loan, and they're not sure that they can be paid back.
Yeah.
Right. So there came an insight. What if this is a salary they earn from a respectable companies. Let's transfer the risk from employees to employer. And so if employers guarantees the EWA to the banks can obviously, there's no risk. And so banks can get the loan at a very competitive rate, right? So all we do, we convince a lot of the banks to do this and a lot of the corporates to do this. And the reason being, the corporates also want to have their employees, employee satisfaction is important. And a lot of employees have gone through troubles during the pandemic crisis. They want to help and they want to retain their employees and recruit good employees, right? You don't want your employees to run around worrying about money. Then obviously they will not concentrate as much at work. And this is very evident in everywhere in the world, right? So if, let's say, an employer like Walmart in the US, Walmart is a great company, it's a big company, but they do employ a lot of workers who are paid minimum wage or slightly above minimum wage, right? So, but we don't have to look at those consumers. We just look at the corporate, and you could give the loan to them as long as Walmart will basically guarantee the loan, right?
Okay. This is the part where it's still favoring the banks, because I spoke to enough business leaders on my show, and they were talking about how the banks are still offering them at arm's length interest rates for business loans, considering that salaried accounts go through the banks into the corporates, so the banks actually know the cash flow capacity of the corporate. They have been long-time customers, so they know the repayment history of the corporate. Yet they're not getting the necessary cheap loan rates that they would, I guess, preferred, in the sense that because it's a profile between corporate and bank that they know very well. It's not a new-to-bank customer. Also, at the same time, I also understand the bank's point of view. All the costs involved regarding raising the cost of fund, resulting in them having to give that interest rate or pass over the interest rate over to the corporate. I get that. But the idea here is that there seems to be no cost savings involved, either from the bank's point of view in raising the cost of fund or the corporates in attaining the business loans. It's still high, or well, at least market rate. So we're not saving anything here.
Actually, that's why the Paywatch does it differently.
Okay.
So what we do is we don't charge interest rate. We charge a nominal transaction fee, like an ATM withdrawal fee. So how we started.
What's the interest, if you can share with us?
So basically what we did is I did a market research on the consumers before we launched the product. And actually, even though these people, when they need a loan, they'll be charging 20, 30% interest. They are not willing to give that kind of interest on wage access because this is the salary they have earned already. So what we did was we went back to the banks and we convinced them, instead of charging interest, this should be interest-free, but we could charge a nominal transaction fee, which is equivalent to the ATM fee. Consumers are okay with paying an ATM fee because level of ATM fee because they were used to, and it was very acceptable to them. So in Korea, we charge.
Even that point, I would like to argue on why we're paying ATM fees, particularly with
There's
the home bank.
actually a transaction fee from banking transaction, actual operation fee involved in there. It can't be completely free. So in Korea, the ATM fee is Korean 500
It
won.
can be because it's not net interest income, it's not net operating interest income, it's none. It's
Oh no, there's actual.
anyway, I'm digressing, but anyway, go on.
there's
Yeah, you know what I mean, right?
But there is an actual cost involved.
Yeah.
And so basically.
That's okay. All right. Well, okay. So transaction
in
fee.
the case of Korea, it was 500 won, which is about 40 cents US, and it's been very well accepted in the market.
It's a ringgit here, if I'm not mistaken.
And here is we are charging 1 ringgit
per transaction.
per transaction, and actually there's no other hidden fee involved.
Okay.
That's the way we do it.
Paywatch sustain yourself with 1 ringgit transaction fee?
So that's why we have to grow the pie, and obviously there's got to be other opportunities such as cross-selling insurance or other products to be. But it is also
Still fee based, lah.
it's going to be what we're trying to do is we're trying to get people in a very good habit, creating a good habit. So obviously, if you look at across the world, this particular segment, obviously, the saving rate is very low, investment rate is very low, and we are not thinking everyone will be using EWA, but actually, EWA is just a start. But if you help them with their loans, you'll be their first sort of a financial platform partner, and then you could offer them other products like micro investment products or savings plan, and just add on products to make him more rich. That's what we're trying to do.
Okay.
And
Okay, we'll take a pause on the conversation. We'll be right back after these messages. Thanks for continuing on with us. I have with me Richard Kim in the studio joining us. He's the CEO and co-founder of EWA, or Earned Wage Access Provider, Paywatch. Richard, let's talk about the philosophy of it, I suppose, or the business case behind it. Both are very important. The philosophy of this is that you're supposed to earn, you're supposed to be paid on the day you earn. I get that bit. But at the same time, you know, the world doesn't revolve around me. I still have to understand that I function in an economy where it revolves around the whole market. And getting paid at the end of the month is the norm. However, as you rightfully pointed out, some segments, particularly the B40 segments, can't reach to the end of the month without having to borrow in between. That is the inescapable truth of how the B40 is functioning when it comes to money management or financial management. That needs to be addressed at a systemic level, perhaps not by Paywatch, but you know, somehow or other try to get the B40 to earn more or try to manage their money more or better. I get that part. But how do we move from where we are now to that level of financial security, at least month on month, when tools are available for them to negate that kind of behavior? Not just payday loans, but now cheaper substitutes like earned wage access.
right. So basically, if you look at this world, the rich people pay less interest, poor people pay higher interest. So the bipolarization just continue to widen. That's the problem. And the reason being is not only some of these people have bad credit, but actually have no credit. So it is not and especially we are here trying to help the younger generation to create a good habit so they'll actually have the mobility to move up to the M40. In order to do that, we gotta make sure they don't fall in the trap high interest loans, and not take on a bigger ticket size loan when they don't even need that money, right? When you give in the credit facility, a lot of people kind of fall in the trap of using it and then having difficulty coming out of it. So our philosophy, we don't give, even though we give it away, we strictly give less than 50% of what they earn. And sometimes we talk to the employers and even lower that sort of a loan to value ratio to like 30%, right? So this is to get by in case of emergency necessities. It is not a big size loan, and it should, if you could clear it by your salary day, you don't need to take on a bigger ticket loan. So actually, this
still
product,
on salary day you get 50% of what you're supposed to earn.
right? At least you need to get that 50% to pay
Plus,
for
minus the transaction costs.
exactly. But still, this will be paying far less, and it's far shorter tenure product, right?
It is.
And which
It's a
means
30-day product.
It's actually on the average of about 20 days, right? Because I mean, if you can take it out throughout the month. So right. So
Oh, okay, got it.
So it will be it averages about 20 days.
As opposed to 12 months or something like that.
Exactly. And once you get over that stage, then I think we really need to get people to at least save even 10% or of that, or invest 10%, and trying to gain the trust to offer a product like that. That's what we're trying to do. EW is just the
I can't
starting
help
point.
but talk about the issue of wage in Malaysia. Not anything else, but the ability for people to just earn more. I mean, it's inescapable that various reports from World Bank to the World Economic Forum has shown that Malaysia's wage is consistent with the rest of the world. It's not growing.
Right.
It's just not growing.
Right.
3% a year is not growing when inflation rate is 5, 6, 7%.
That is the truth. In
So you're earning less year on year.
Yes, and I mean, and that's becoming true all over the world.
Yeah.
To be honest, even though our increase in wage is not catching up to the inflation, which is a big issue. But having said that, also when you're starting out in your 20s, your income will grow over time if you put in the work. You get promoted, you go up. But a lot of times people are very used to just spending it all, right? And then so even if it grows,
So you lose sight of the long run.
Exactly. And that's why getting them a habit, whether you make small or big, I think it's a lot to do with habit.
But habit is a process or is a function of time versus repetition.
Right.
So
Right. So that's why
my fear is that because of them being comfortable with EWA, they just have that kind of repetition on building that habit. You know what I mean?
Actually, and yet it is not.
You're offering a service that you don't want people to continuously use, but at the same time you want people to use it. You get me or not?
And yet this is, if they were coming from, I mean, like if they had if they didn't have any other loan or credit facility they're using today, that could be the case.
Yes.
But what we are trying to do is, actually, if you go and meet these people, they're already using another loan and paying, unfortunately, at a much higher interest rate, longer tenure.
Can't get them out.
By transferring them
Even
over
credit card,
to,
if you think about it.
Exactly, and that's why we are a credit card challenger, in a sense.
Yes.
Because
yes, you are.
We are, and
yes, you are. I see
so
now.
so credit card penetration in Malaysia is only about 20%.
That's right.
Korea is the most saturated credit card market in the
Is
world.
that?
20 million economic active, and we have 100 million cards. Basically, 4 cards in a wallet. And yet, our segment customers, it's young, B40 workers, 50% of our users do not have credit card. And some of it, because they don't qualify, but some of it, actually, they see it as a trap.
Yeah.
They see it as this is a
What's
bad
the interest rate
habit
in
to
Korea?
get into.
Credit card?
The APR
Yeah.
for the cards is the same thing. It's 18, 20%. But then we have a hard cap of 20% on the interest rate for any lenders,
Okay.
anyone who's official lenders.
Yeah.
There are
Banks,
informal lenders out there, banks, second-tier banks, lending companies, capital companies. They all have that cap. But what's happening is a lot of these companies going out of business now in my country. The reason being, having said that, because the cost of fund is going up.
Of course.
And the credit loss is going up.
Yes.
And they cannot actually sustain themselves.
Because you can't transfer the increasing credit risk to the consumer once you have the 20% cap.
When you have the cap. So a lot of these companies going bankrupt. But does that mean there will be a less need for the loan? No. These kids are then turned to loan sharks, informal means, and actually paying much higher interest.
What about cooperatives? Does this exist in Korea? Cooperatives? Co-ops?
There are co-ops.
Where they give you the loan, it's like a personal financing loan, and then they just, on payday, they just slice the repayment every month.
Actually, we don't have that. We don't have that yet. But I mean, a lot of unsecured loans are based on your pay slips.
Yeah.
Your last 3 months average, what you have earned.
Yeah.
But obviously, this particular segment, they don't qualify for such unsecured loans.
Okay. Final question is this. What is the conversation that you're having, or Paywatch is having, with our regulators, Bank Negara? And I don't know, do you speak with Securities Commission as well?
Actually, basically, when we enter that APEC 22,000 contest, it was sponsored by Bank Negara and MDEC, and they introduced us to the first-tier banks here. And right now, we started to give the lending on our own with that 1 ringgit transaction fee, but we are actually getting the banks to do this on our behalf, because in order to scale up.
So you're a lender?
Oh no! That's not what we're trying to do. We did it as a test market, sort of like a pilot stage, to show that it works, and actually now the banks will give directly to the users.
Are you comfortable sharing which banks?
Actually, we're starting with Hong Leong Bank, right? And it's the final stage of approval.
Okay.
So the reason why I didn't.
Sorry. The reason why.
Oh no! The reason why we are piloting it. That's what our intention was all along, to start with the bank, but obviously the approval process takes a little bit longer than expected, while our corporate customers wanted to have the facility.
Bank Negara hates me because I like to point this out to them. So
So actually, it is it is about done, and so I'm hoping we'll be start to give directly through the bank.
What is the timeline that we're looking at, so that the consumers can actually look out for this product being launched?
So the product is
with the relationship with the bank, I mean.
Yes. Hopefully, as soon as I'm hoping, at least probably in September.
There's a lot of adjectives there, Richard. Probably hoping.
Yes. But we had long discussions all along,
sure.
and I think.
I'm gonna get in trouble with Bank Negara, so I'm just gonna back off.
I think we have answered all the questions. I think we'll be going live for sure in September.
Do you think that this is going to be a trend in terms of trying to provide access or better financing facilities to the B40 EWA?
Yes, I truly believe that.
So you're looking at more competition coming into your space anytime soon?
I'm hoping, because you can't change the world alone.
Wow, really?
Right. I won't.
That's such a PR answer, Richard.
No, it is. I honestly believe that.
Really?
Yes.
Is the market big enough for Malaysia?
I think so. Because, I mean, how many lenders are there in the world?
Yeah.
When you think about it.
Yeah.
It's the oldest business in the world.
Yeah.
But we just got to do it differently.
Yeah.
That's what we're trying to do.
Okay. Other markets that Paywatch is thinking about?
Actually, so Malaysia was our second market. We are launching in Hong Kong with Ping An Online Bank there in April. In Korea, our bank partner is Hana Bank, which is number one bank in Korea.
Yes.
And then I'm traveling on to Philippines right now to have discussions with various banks there. So
you're a busy man.
I'm constantly on the road, living out of a suitcase.
Oh.
Okay.
I don't envy that life. I was like that.
But actually, when you believe in something, if this is a conviction.
There was a point where I wasn't even aware of which city I was in. Can you believe it?
That's true.
It was really.
True. But
yeah.
So that's why I think if it's, as long as it's the meaning of your life, then it's okay.
I wish you all the best, and I do look forward to Paywatch making the necessary announcements. However, settling the finances of the B40 is much more systemic. And I think that EWA does resolve to these problems for them, but I don't know whether this can actually help them grow their career or improve their wage in the long run. That's my biggest concern. I'm not saying that, I mean, of course, this is a product. You were talking about the good points, but how do we
the employer
get the mobility up, the social mobility up?
Right, but what we're seeing is the employers are telling me people, because of the facilities also, their attendance has gone up because they have to come and work to earn.
Yes.
That's so actually they see less absenteeism and stay on their job for the longer period. So we are seeing positive changes.
Okay, thank you very much.
Thank
That
you
was
very
Richard Kim, the CEO and co-founder of Earned Wage Access or EWA provider Paywatch. If you missed any part of this interview, just head on to astroawani.com, look for Notepad, you can look for Paywatch on all our social sites. Also learn more about Earned Wage Access. Perhaps it's a good time to understand the whole notion of it and try to have a greater conversation on this EWA. Yeah. Until then, thanks very much for watching and goodbye.